Good morning, good afternoon, good evening, depending on where you are joining from. I am Gauri Das and I am your host for this chat show, Factoring One Stop Solution for Your Global Aspirations. And today, as usual, we have brought two eminent speakers who are expert in their field and they are going to talk about everything around receivable finance. So grab your cup of coffee and be glued to the screen. But before I bring them in, let me talk quickly about India Factoring. India Factoring offers working capital solutions through factoring product aimed at converting your receivable into cash. The company is a subsidiary of a European bank, Bank PLC Malta, and is registered with RBI as NBFC Factor. India Factoring is also AD3 category authorized dealer. Through our global network, we offer one stop solutions around receivable finance. Let me talk about our first speaker today, Mr. Sandeep Mohindru. Sandeep is a chartered accountant by profession with more than 23 years of experience in technology, finance, and consulting. Sandeep is the founder director of M1 Exchange and Mint Group. M1 Exchange is an online exchange for discounting of trade receivables for MSME enterprises in India. The idea is to accomplish cumulative volume of bill discounting of value USD 3.5 billion in 4 years. Mint Group offers SaaS-based finance and HR solutions as well. Sandeep and team are now working towards setting up of International Trade Finance System ITFS for global transactions. Sandeep has also been chosen as India partner for Pros Prosectra, an initiative by Monetary Authority of Singapore, MAS Singapore for International Trade. Sandeep is part of NASSCOM SME Council, CII FinTech Association, with an objective to enable digital transformation benefits to the industry. Welcome, Sandeep.
Thank you. Thank you so much, Gauri and India Factoring for hosting this and inviting me over.
Thank you, Sandeep. And we now look forward to invite our next speaker, Mr. Ravi Valecha. Ravi is an experienced banking and financial services professional with expertise in factoring and supply chain finance. And he's currently CEO of India Factoring. Welcome, Ravi. Thank you, Ravi, for joining.
Thanks, Gauri. Hi, Sandeep.
Hi, Ravi.
So, Sandeep, as we discussed during your introduction about this trades and M1 exchange, the whole idea seems to be extremely fascinating. You have an invoice, you put it up, and you get your money in no time. But when I was looking at the data, it did not go well with how easy or how quick the transaction can be. And despite government bringing in the regulation that any organization with 500 crore plus turnover need to be there, still there is a long way to go because last what I read was 40,000 crore, that was October 2021. This is the amount that has been clocked through Trades 3 platforms. So why is it like this? Is that lack of awareness? If that is it, we would love to hear from you so that you can spread awareness. What is Trades and what is the role of M1 Exchange in this whole ecosystem of receivable finance? Over to you, Sandeep.
Sure, Gauri, sure. Yep. So essentially, you're right, Gauri.
Seems
Threads has.
technology at its best, and Sandeep is unable to connect.
Can you hear me or you cannot?
I can hear.
Gauri,
Sandeep,
can you
your
hear me?
voice is not audible.
Okay. Can you hear me now?
Yeah, you are back. Yes.
Okay, okay, perfect. So yes,
Yes, I can hear you
trends.
now.
Okay, so trends as a concept is a recent
Yes,
phenomena.
yes, it's perfect now.
Okay, last 3 to 4 years we've been in existence, and the ecosystem has been created in these last 3 to 4 years for trends to emerge. The first 2 years of Tread's journey has been more, like I said, emerging the ecosystem. That means all the banks and the financing institutions who are on Treads getting a product note approved and sanctioned internally so that the liquidity can come on the Treads as a platform. Most of the time has gone in that, and which you can say as onboarding per se. And today, approximately 45 banks and NBFC factors together are transacting and financing the transactions on Threads. And very recently, about a month, 2 months ago, the Factoring Act has also allowed now NBFCs to come and do the factoring transactions, including Threads. So in the new financial year 22, hopefully you should see about 100 to 150 NBFCs also joining Threads as a liquidity provider. So the liquidity is increasing multifold on Threads, and that's what is driving the volumes now. In the current financial year, which is going on, ending in another 2 weeks from now, all Threads platform would have done transactions worth 37,000 crore for the full year, just for this financial year. And overall, between from start to now, which is 4 years from now, we would have done transactions worth about 60,000 crores. So out of that, if you actually look at it, the lion's share has happened in the current financial year. So this is how it is emerging, and the adoption is going up multifold. The number of participants which are live on the threads are in excess of 35,000 enterprises on all threads platforms put together. And how it works is essentially there are three participants on threads. One is a large corporate, second is an MSME, and third is a bank oblique a financing entity. And the MSME who raises an invoice on the large corporate submits his invoice for factoring, oblique discounting on trades, and the large corporate approves the invoice digitally for its validity, due date, commercial side of the transaction in terms of quality, quantity. Because this is validated electronically and duly authorized by the board resolution of a large entity, it brings a sense of I would say genuinity to the financier that this transaction has no dispute per se between buyer and seller. Now, once the invoice is approved, then the financing institution comes and bid to discount the invoice. And basis the best bid, the financier is selected by the supplier and the transaction is completed. The second part of the transaction is the collection from the large corporate on the due date, which is the due date for the receivable. Let's say this is 60 days or 45 days, and on that due date, Trends has an auto debit on the large corporate account, and we collect the proceeds and give it back to the bank who has funded it initially. So that's how the whole leg of the transaction happens. Now, what role does M1 play in this? Of course, we are onboarding all the participants. We are enabling the legal agreements between all of them. Now, this is an important part, is that because this is an exchange and this has been given as a name of an exchange, it enables many to many relationships. That means a financier, let's say any bank or a financing institution onboarded once, doesn't have to sign agreement with 35,000 enterprises in India. They sign with the exchange and they get access to deal, finance, KYC, use KYC of these 35,000 enterprises, which have been done by the exchange. Now, from an MSME perspective, I mean, he gets an access to 44 banks in one go without signing any agreement with them. He gets to finance transactions for his customers of any number. I mean, whether it's a Maruti or whether it's a Hyundai or whether it's a Toyota, it doesn't matter to him. I mean, he can do his transactions by onboarding once. So that's why we call it many to many relationships. So M1 has to enable this ecosystem, this network, wherein you have to onboard, you have to source the limit from the banks by running a credit note with the banks on a specific anchor buyer, and then the MSME start to transact. So if you ask me, the speed of financing on M1 now is 1 hour. I mean, so if you put your invoice, on an average, we see that in an hour it gets discounted, and next day morning between 8 a.m. to 2 p.m., the money is credited to the supplier's account. And from onboarding an anchor to his limit setting to enabling him to start the transaction, today it has come down to 3 days, which earlier used to be in the range of about 5 months, 3 to 5 months earlier. Now it's come down to 3 days. So if once the agreement is signed and the limits are set, and the vendor is onboarded, and they can start their first transaction. So that's the kind of evolution which has happened in the ecosystem today to reach that. Over to you, Gauri. Gauri, can you hear me?
Thanks,
Gauri,
Sandeep,
can you
for
hear me?
explaining it so well. And thanks, Sandeep, for explaining it so well. Technology is playing some hide and seek with us today, so I could not gather everything.
Gauri.
Yeah, I can hear you. Yes, you can hear me. Ravi, can you hear us?
Yeah,
Yeah, I
yeah.
can hear you.
Okay, let me try again. Sandeep, am I audible now?
You're
Yes.
audible, Gauri, completely.
Okay. Yeah, so I said that technology is playing hide and seek with us today, and I could not gather everything that Sandeep said, but I hope. Okay, thank you. I hope our audience were able to understand how it works. And there is a need of speed today. And like Sandeep said, what was happening in months is happening in hours today. So that is a very good move. And another thing that I could gather was the transaction volume is increasing multifold, especially this financial year. It has gone to 37,000 crore, is what I heard. If it was not the right number, Sandeep will definitely rectify this. But if that is the number, then it is really, really good because 60,000 so far and 37,000 in just a financial year. So good days lie ahead. And as trends say, "Kal kare so aaj kare so trends." So that's how it should be. Now talking to Ravi. Ravi, there is a need of speed, but there is a need also, especially when it comes to money. So IRDA has played it a very has bring up a very good move, and they have recently allowed insurance company to issue insurance in favor of lenders, NBFC factors to finance against domestic receivable of sellers. Will it encourage more factoring companies to come into the domestic receivable financing space? Will it support factoring business growth in India? What are your views on that, both on domestic and export front?
Yeah. So if you were to assess,
Ravi, I hope I was audible.
yes, you are. Thanks. I can answer. I'll carry on. So, if you were to assess
Seems you are
globally,
unable to connect with.
Sandeep, you can hear me, right?
Yeah, yeah, I can hear you. Carry on,
Gauri,
Ravi.
there is something issue with your end. My end, it's for working perfectly fine, and Sandeep's end also. Okay, I'll carry on. So, internationally, if you were to check
Yes.
factoring, the growth of factoring across the
Okay.
world, it has been the factoring growth has been backed uh, equally or more by the credit insurance. So, actually, when you see, the fundamentals of financing the SMEs or MSMEs, you need a credit support, right? because these MSMEs and SMEs are not able to provide any underlying collateral or security, which many a times the banks end up asking for it. So, what is that something which can be supported? But many of these SMEs, MSMEs end up supplying to mid corporates and even large corporates. The strength of the underlying receivables is equally worth. Unfortunately, in the legal terms, we call it as an intangible security, or the security's worth is not considered like to like as a collateral. However, there are credit enhancers. I consider personally, if you were to take my opinion, I consider the strength of the receivable much more because you are deriving the comfort of the underlying trade and the large corporate who is actually ending up buying from the SMEs. To put in another perspective, you add another credit enhancer by way of credit insurance, and that has been the global benchmarks where the factoring companies and the banks across the world added a layer of comfort as a portfolio level. So that's what the job of credit insurance ends up providing, which is a much more robust credit enhancer for the MSMEs and SMEs working capital and backed by the strength of the receivables. Across the world, factoring industry has grown on the back of credit insurance. Unfortunately, in India, as anything new in India, it ends up taking time. Like Sandeep mentioned, Trends has grown good. They have done 60,000 crores in next number, past 4 or 5 years since inception. This year itself has been 37,000, which is commendable. And I'm sure that as we go along and year on year basis, the growth will be even more higher, considering that the time value of money is increasing and the awareness levels and the push and the pull factor both are working in tandem to grow the market. Uh, I believe that the credit enhances through credit insurance is just another cherry on the cake, which will ring fence the product, and banks and NBFCs who want to, add a layer of security will definitely jump at this proposition, not only from a trade perspective, but also from a general regular means, a textbook sort of a factoring point of view. Also, even from an export point of view, also the customers, the suppliers will definitely end up benefiting from a non-recourse proposition, not just on non-recourse, on paper, but backed adequately by the security. In international space, this adds a significant layer of comfort for the seller, as it has been demonstrated specifically during the pandemic times, which were uncertain that many buyers across the world possibly have gone through credit issues, and many of them have gone through bankruptcies also. This is the model which secures the buyer's risk. Of course, in India, the prevalence of ECGC has been there and the regular means of coverage, but this is another important initiative where the banks and FIs can take the credit insurance on their own books and underwrite the risk. So, huge positive reformatory measures, I would say. The next level is something which RBI needs to consider this also in their guidelines, which are currently silent. But in my discussions with RBI is supportive, but that needs to be there on the paper to enable further reformatory requirements to take, I would say, catapult the factoring and including trades to the next level. So I see a next 5 years, a huge growth trajectory for trades as well as factoring.
Factory.
Over to you, Gauri.
Thanks, Ravi. And what I could gather Thanks, Ravi. And what I could gather is it takes time whenever there is a new thing, like Sandeep also mentioned. And I remember when it was about life insurance. So, for a very, very long time during my childhood days, I would see that it was only about life insurance. We did not know about any other insurance at that point of time. And still, the penetration is very less. So, it would not be different for credit insurance. It is going to be the same way, but it would be the pickup is faster in comparison to to how it used to happen for retail. So that is going to be a huge positive for the industry, for the traders. And you said it has already shown some impact during COVID period, when we had this import factor insurance, and now it is coming in the domestic field as well. So thank you for sharing this, Ravi. And I would love to understand from Sandeep regarding the same thing. Like we discussed, need for speed, Threads is doing it very well. But what about, you had recently written also about this, that invoice based trade credit cover transaction would be a game changer. So how is it going to change the overall scenario, and how is it going to help SMEs and MSMEs when we have the invoice based trade credit cover? Over to you, Sandeep.
Yeah, Gauri. So actually, yeah, on trades, when we set up a limit for financing of the receivable, we are not evaluating the balance sheet of an SME. We are not evaluating his credit. We are evaluating the credit of his customer, which is rightly so. As a result, Threads is highly scalable because we can onboard hundreds and thousands of SMEs without impacting and looking at their balance sheet. Now, what happens is that when the financiers look at large corporate, who is the end payer for who is the end paying entity for the MSME invoice, their credit in many cases is still not up to the mark that the financier feels comfortable for unsecured credit or unsecured setting up a limit on that buyer of the MSME. And for that purpose, the insurance will play a very important role for bringing the confidence onto the lender, that is the financing agency, about the credit limit set up on the platform like Threads, and even for factoring outside Threads. And on Threads, what we have worked with the insurance company is that if the limit can be set on an invoice by invoice basis, or not limit, I would say the insurance policy can be issued on an invoice by invoice basis rather than being issued on a whole turnover basis, which therefore is possible because this is entirely digital platform, and the bank can at their own choice decide which insurance company, which invoice. So that kind of enablement has been enabled on the Threads wide digital means. So which is what, when I reflect that the cost of doing financing include using insurance will be very competitive, or will be very more reasonable if it would have been on a whole turnover basis versus a per invoice basis. Number one. Number two, even the defaults or the insurance utilization will be invoice by invoice. Maybe that, so so it is not that on a whole turnover basis the insurance cover is being taken, and therefore the claim is on the entire value of the outstanding, but it's only for a specific invoice and for a specific bank. And so this digital process or enablement, working with the insurance company, it's creating a more beautiful side of the product as trade credit insurance versus in its earlier avatar or in its current manual avatar. That's the, again, Gauri, like we started speed. So this will bring a different kind of speed to the whole process. Back to you, Gauri.
Thank you, Sandeep. Thank you, Sandeep. And I understood that it is going to make the transactions much more secure so you can sleep better. And at the same time, it is not going to cost you a bomb. So that is added advantage of this. Thanks for sharing, Sandeep. I'm coming back to Ravi. And Ravi, it has been traditionally seen that factoring is used by SMEs and MSMEs, but now we are seeing even the mid and large corporates are also getting attracted towards the product, and they are finding a lot of benefit in going with this product. So, what is it that is attracting mid and large segments as well? And they would like to have larger limits. So, how all this ecosystem works out? Over to you, Ravi.
Thanks, Gauri, for that question. Yes, indeed. While the basic parameter of factoring is to enable working capital finance for SMEs and MSMEs, that's one aspect to look at it. However, there is other important aspect of factoring as well. So factoring is not just a financing solution. Factoring is much more than financing. It ends up providing as an off-balance sheet solution, deleveraging part of it, and in case of credit insurance or an import factor based transaction, it ends up providing as a credit coverage also. Besides that, it also ends up in a traditional manner. When you do it, it ends up providing as a collection mechanism also. The import factor or the factor itself plays an important mechanism for collections. Imagine, to put things in perspective, imagine an Indian exporter supplying to, say, for example, South America, Mexico. It's a 12 hours difference in the time itself, and the language barriers also. So there, the important element of the factors chipping in with the expertise in the foreign language and also the time difference. There, the gap is being fulfilled by the import factor also. So that's an important element. So besides financing, five more other critical elements come in, which is the credit to insurance part of it, the deleveraging and off balance sheet perspective. So these are the important elements for large corporates. See, for large corporates, raising finance is not really a challenge, right? More the banks, all of the banks are running after them with an obnoxious sort of pricing also. However, still the corporates are willing to go and go for a premium when it comes to factoring sort of an arrangement, because I always call it as an optimum cost of capital rather than just comparing it as a financing cost. So it is a completely different impact when you review it from an holistic perspective on the balance sheet effect, the cost which comes down rather than just comparing it from a pricing point of view. So yes, large corporates, mid corporates, everybody is interested in the factoring space. It is only the required time, signs of time which we are prevailing in, and that's where I see that the next 5 years, possibly in India, is the growth go-to factor for factoring initiatives like these. And definitely, globally, it has already been seen that factoring is a standard bread and butter product across the world. In India, it has been lagging due to whatever legacy issues which we have to comfort in the traditional means of financing, but definitely it is seeing the light of the day. And next 5 to 7 years is the next, I call factoring as a sunrise industry. Back to you, Gauri.
Thanks, Ravi. And you rightly said that factoring is not just a solution, it's a complete package. So you have a collection mechanism as well inbuilt. Now you spoke about insurance as well. And the challenges that an exporter would face because of different law of land, the geographical difference, the time zone difference, the language difference are all taken care of. And that's what is attracting even the mid and large corporates towards this product. Thanks for sharing, Ravi. And here's a question. We would take it up. This is for Sandeep. There's a
Yeah, Gauri.
serious lag at my end, so my apologies for that. Sandeep, the question is, what would be TATs and documentation required for SMEs to get onboarding on exchange? Is there any upfront fees? This is from Puneet. Puneet, thanks for joining and asking your question.
Yeah, yeah. Yes, Puneet. So the turnaround time
Over to you,
is,
Sandeep.
yeah, yeah. Yeah. So Puneet, the turnaround time is 15 minutes actually, and the documentation required for SMEs is all online. What we have enabled on M1 is a digital onboarding process wherein the SME just enters his PAN number and Udyam number, And using the Udyam number, we fetch 70-75% of his enterprise data from multiple sources. And the SME just need to validate on the screen if the data is correct that has been sourced. And practically in 10 to 15 minutes, we onboard the SME, including video KYC, if it's a proprietorship. If it's a partnership, oblique private limited, yes, one has to fulfill the formalities related with that for KYC. But the documentation, the agreement signing for onboarding, everything is digital. It gets completed in 10 minutes. That's as far as the onboarding is concerned. Today, and it's a very, very pleasant surprise. Today, 900 cities people are logging in using mobile phone and getting their invoices discounted. So, over and above 100 cities in India are all, upcoming cities, C cities, D cities, and but people are logging in from 900 cities and doing this. So thumbs up to the digital evolution of India. I would say that they are today able to do it. As far as upfront fees is concerned, it's just a very small onboarding KYC fee in a way, so that the cost of the KYC and the agreement, etc., is covered, and it's a very small fee value. That's it. And otherwise, the MSME pays as and when he does the transaction. I mean, there's no fixed fee for anyone, for any of the participants. If there is a transaction, there's a small transaction fee charged. That's how it operates. So I think there's a lag with Gauri. Probably I'll say thumbs up, Gauri, and then you can see it and realize that we finished.
Correct.
Yeah, sure. Thank you. Yeah, so Sandeep, you just mentioned that there is an excellent digital reach now. It has reached 900 city and people are using their mobile phones. But here we are sitting in Mumbai facing this technology challenge. So it is also happening at the same time. We have another question, and this is from, again, there is some lag. Sandeep, here is to you again. The question is from Paramanandan. Thank you for joining, Param, and asking this question. Is it possible for corporates to avail receivable finance through Trades platform?
As long as a
Over
corporate
to you,
is less than
Sandeep.
250, yeah. As long as a corporate is less than 250 crore permanent, they can come and discount their invoices. If the corporate is more than 250 crore turnover, then they cannot discount their invoices, and then India factoring will play an important role there.
Yeah, absolutely.
Gauri, you can start.
So what I heard is up to 250 crore, if there is a corporate, they can avail this facility. And thanks for clarifying this, Sandeep. This one is for you, Ravi. I hope you can hear me. Most of the exporters will have a conventional banking arrangement, and they will get their working capital needs met through that, but they still go for this product factoring arrangement. Why is it so, and how is it different from the conventional banking that they already have in place? Over to you, Ravi.
Thanks, Gauri, for this question. Obviously, there has been a evolutionary phase, I would say, that in India, everybody had been used to traditional means of banking, and as Sandeep also outlined, that the initial 3 to 4 years took trades to take maybe reach 30,000 crores, but this year itself it has been 37,000 crores. So that's the evolutionary trend for even the general factoring point of view. Also, a huge, I would say, a paradigm shift has occurred in the past few years, where the awareness levels and movement towards non-traditional products or modern products have taken place. It's unfortunate. It's only to the loss of the Indian economy, I would say. But now that the things are in perspective, and as Sadeep highlighted, the digital is something which is future. So everything what we are talking about is a new age in the current scheme of things, and looking prospectively also, the new age revolution is there, moving to the new age of financing also, rather than relying on the traditional means. So huge momentum is gaining shape, and definitely all corporates, not only SMEs and MSMEs, even the mid corporates and the large corporates are moving towards these new ways of financing rather than getting stuck in the traditional means of financing. So huge boost. The supply chain is the next future industry. Export factoring as well is a new ways of doing it. And as Sandeep mentioned, that up to 250 crores, it's the trades, which is enabler. About 250 crores, it's a banks and the traditional factoring companies like us who end up providing the fulfilling that gap. But I see that possibly in next few years' time, this is a testing model which RBI has brought in for trades as an initial enabler for the MSMEs. Once this is a proven model, and we are already seeing that on the ground, the next level of growth is that moving to digital capabilities of allowing even the upwards of 20 to 50 crores also to transact. I think it's only a matter of time, I would say, but sooner or later we can expect move towards more digital based economies. And today, Trades is filling that gap. There are many, of non-exchange mode supply chain providers. Also, we have our own digital capabilities. Also, banks have their digital capabilities. Also, so in a way, the gap is being filled in. But I see that a uniform mechanism possibly in next few years' time, where there will be more enablers placed to corporates to avail these sort of mechanisms also. Thanks, Gauri. Over to you.
Thank you, Ravi, and thanks for that thumbs up. I hope it's better now.
Yeah.
So what I heard is it's all about digital capabilities, and what I also heard, between you and Sandeep, all receivable financing needs can be met. So thanks for sharing that. And I would now come back to you, Sandeep. I hope this time you can hear me well. It is about the new policy framework in making about MSME. A draft on national policy for micro, small, and medium enterprises is in making, and we would love to understand from you what lies ahead here in the draft policy framework, or how is it going to change things for SMEs and MSMEs. Over to you, Sandeep.
Yeah, sure, Gary. So essentially, this draft policy is a very interesting document. It's and one kudos to the government think tank who is thinking in this direction. Actually, so it's basically they are focusing on some specific areas, and these are eight specific points that they're working towards, which can enhance the MSME working ecosystem in India. One such area is and which is self introspection by the government, is inter-government role and responsibility, which has been highlighted in that policy. That means how the central government schemes and the state government schemes are, and the district level implementation authority of the state government, how they are working with the same scheme, objective, and in sync. This is a very, very powerful thought of working together between different level of authorities. That's what has been discussed in the scheme. The second thing that they've talked about is taking the facilitation councils, which have been set up at a district level, which probably is more at a state level today, and therefore in larger states, the MSMEs have to travel, or it's very inconvenient for them to use these facilitation councils. So it will go down to the district level. I'm talking covering at a very high point. And one point which has been discussed in the policy is also about access of finance to the MSMEs using the cash flow based lending rather than the balance sheet based lending. This as a concept has been in discussion since few years in India. This document is basically highlighting that how the financial institutions should also look at crunching this time to implement the cash flow based lending rather than just the balance sheet based lending. Uh, Two more important points connected in this is technology development and the skill development at the MSME end, which is very crucial for India to flourish and become a 5 trillion economy. That the MSME are trained, their teams are trained to adopt technology, and skills are developed amongst them. Again, there are various points discussed in this document about that. uh, the other points connected with this is ease of doing business, and especially for the import export MSMEs, wherein it has been discussed about how the linkage with the export terminals can be simplified, in transport infrastructure can be made available. The work happens in hubs rather than happening on a fragmented basis. So that's on the ease of doing business side. Again, the document is highlighting very key points and the related actions with that. Then is about exit code in India. That means if there is any case of insolvency or a bankruptcy, then how can an MSME have a smoother exit from their business? That code is more today prominently used for larger corporates who have that kind of infrastructure. But the MSMEs, how can this be made smoother for them? These are some of the points like any other scheme. If the good part is that it is documenting everything, the implementation is going to be the key driver. I mean, if implemented well, this can bring a lot of results, positive results further for MSMEs.
Thanks, Sandeep, for sharing all the pointers. And looks like it's going to be a game changer. But like you rightly said, there are pointers available there, but execution is the key. So if it is executed very well, then it would make life easy for MSMEs. Here we have another question, and this question is from Manoj. Thank you, Manoj, for joining and asking your question. There has been hesitation in using digital platforms by small companies. They prefer going to banks over any online portal. How is it going to change in coming times? Anyone can pick it up, or Sandeep, you can start, and Ravi, you can add.
Sure. So Anuj, I agree. There has been any hesitation, and it's a culture change in the country which is happening. And the success stories that you bring forward in front of the MSMEs all India. Like I said, 900 cities. I myself was surprised that people from 900 cities are getting their invoices discounted through the mobile phone. The discussion like this probably will bring confidence and motivate more people, that their hesitation gets removed. uh, the platforms have to be more secured, and that's why regulated platforms and the regulated financial institutions actually are more secured and safer vis-a-vis digital usage is concerned. We are bound by the laws of confidentiality, oblique data privacy laws in the country, and we are audited by the concerned authorities for that. So that's very key element to bring that confidence into the people so that their data is not misused. Having said that, I don't see if the MSME doesn't evolve to use the digital platform in coming days and months, there will be any other choice. The system will push him to change. Uh, I mean, it's we are in that stage now.
Yeah. Yeah, so
Yes,
I may
Ravi.
add. Yeah, so I would add. Obviously, what Sandeep made sense. To put things in perspective, it's like looking at glasses half full or half empty. I would say that yes, it is still half empty, but the progress, just to demonstrate, since in 2016 demonetization happened, and overnight people moved to the the digital means of financing, be it on the phones and all that. And we have seen since then the UPI has picked up, and other means of financing has picked up, and other means of making digital payments, and all transacting on the digital means is very, very effective. This was further demonstrated during the past 2 years of the pandemic, when most of us were bound homebound, and we ended up transacting on various means, various things on through digital means. The banks were operating, although people were restricted to move out and all those things. So it has been enough proven that the momentum is there. And as Sandeep mentioned, that adaptation is something which is required. Those who adapt, they flourish. Those who do not, they perish. It's the rule of the nature, and that is what we are seeing being demonstrated. And I am reasonably confident of the MSMEs and the enterprises of India. They are the most entrepreneurial, I would say, and has been demonstrated during the pandemic times, when overnight, when India was short of mask and PPE kits and all those things, and within 3 months it was an oversurplus. So the adaptability of the MSMEs and the entrepreneurs in India is to the top level, and I don't see a challenge that they will move to the digital means sooner.
Absolutely, Ravi. And yes, you rightly said, and the data also proves it. Recent data from Government of India has shown that from 2019 to 2021, there has been an increase of 90%. I'm quoting Live Mint. So if this is the transaction increase digitally, definitely people are changing the way, the mindset. Definitely the way we say there has to be a digital mindset to use digital, that is already in place. At retail level we have started doing it, and like Sandeep said, security plays a very important role. And the dependency also, it should be very, very reliable. The way I am experiencing it today, it should not be like that if we have to go digital. Thank you so much, both of you, for sharing your thoughts. We have another question, and this one is directed to Sandeep. This is from Vinod Chaube. Thank you, Vinod, for joining and asking your question. The question is how the aggregator, who are largely fintech companies, are helping trades to leverage this platform. The speed at which they are able to arrange onboarding, they may be posing challenges for existing NBFCs in retaining their share of business. Over to you, Sandeep.
Vinod, believe me, this is the question which I had to answer in 2017, 2018, until the early days of 2019 for the banks. That this is the same business or not the same business, and you are going to transpose the business into the digital platform. And the same story will now repeat itself for NBFCs as the NBFCs get opened. So really speaking, this is an enhanced business, which today is not, many of it is not done by the formal means. The financing on trades, approximately 30% is going to micro enterprises. That means up to 5 crore size. So if I am doing as an exchange in 1 year, if I'm doing 13,000 crore or 15,000 crore as one exchange, 30% of that, that means about 4 to 5,000 crore is going to micro enterprises, right? And 30% is going to small enterprises. So 60% of the money is going to micro and small, and 40% is going to medium. I'm just talking ballpark numbers. Now, is this business today being done by NBFCs? Very limited, because does NBFCs have reach to 900 cities to service micro and small? And what is the cost of servicing them? That itself will not justify. So really speaking, this will be a more business enhancer. Every bank has enhanced its book of outstanding by an X value on the and their market share on trades. And the same thing is going to happen with the NBFCs, that they're going to enhance their book. The important part is, if you are servicing bilateral, micro and small in 900 cities, then what is the default ratio that an NBFC will experience versus the default ratio they are experiencing on trades? It is 0.35% on M1 in last 5 years. So by the end of the year, by March, we would have done what 23-24 thousand crore cumulative, and outstanding would be about 2,500 crore as of year end, or maybe 3,000 crore as of year end, and the default is 0.35%. So you see, that's the positive side, and that's the cost of doing business will dramatically change, and this benefit is getting passed on in the pricing. uh, right? So actually speaking, it is not transposition of business. This is enabling the business in a manner that it's healthy for every person in the ecosystem to grow out of this. And it's now it's unstoppable, if you ask me. So make more out of it as we can. And this is bank is our customer, NBFC is our customer, I mean, at the end of the day. So we enable them that how we can work together to build a product note in their internal system, so that it can they can scale up very fast. And of course, like I said, 0.35%. So that percentage is maintained for them. They get ROI, appropriate ROI, as well as they get scale up, as well as they get uh, 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 lower default. Now, important part, which is why banks have started adopting it, is the technology. If the NBFC has to deploy its own technology connected with this and manage that technology, that itself is there are other priorities for any NBFC. Every NBFC is not on supply chain bandwagon. I mean, there are other priorities for every NBFC. There are other investments for every other NBFC. Now, this is a plug and play model for them. As we say, it's a SaaS environment today. The whole world is on a SaaS basis. So this is the best of the best SaaS product made available to them. They really don't have to invest, make any fixed cost. What else do you want? I mean, you see, you get digital, you get 900 cities, you get lower default, you get ROI. So for us, NBFC is a customer. It's not about his business I'm going to show to him. Then in few months I will perish. So unless and until I'm not showing him new business, uh, I cannot expect to grow myself. That's how the whole ecosystem is.
Absolutely.
Thank you, Sandeep, for this reassurance. And Virod, it's not a fight for NBFCs. Everybody need to collaborate. It is a win-win situation. Ravi, would you like to add your thoughts here?
No, I echo Sandeep's views. It's not about competitive forces. It's all about increasing the pie. And as Sandeep mentioned, it is also reaching out to the last mile where the coverage is not there. 900 cities. If anybody wants to invest in 900 cities, even with a small office or possibly one-man show, that's a huge cost built up already. Here with the digital means, you're able to cover that 900 cities in a sitting out of your maybe small office, or maybe even one room office or one cabin office. Also in the smallest of the NBFCs have that reach. So I don't think that is just a competitive forces acting. I think it's all about growing the pie and collectively growing the pie, and there is enough pie. And in a nutshell, it ends up contributing to the towards the goal of 5 billion, a 5 trillion economy for the what India is aspiring to. That 5 trillion economy is how if everybody thinks that okay, if somebody's taking somebody's share, that 5 trillion will never be reached. We'll still remain at the 3.5 million, 3.5 trillion economy, and that will be just sharing of the pie within that. Somebody else will take that. So it's a growing economy, and I think there is every bit for any organization to play. It's all about adaptability game. The earlier we adapt to the new ways of functioning, I think it is the way of functioning.
Thank you for bringing in angle of abundance and adaptability, Ravi. We move to next question. It is from Ramnathan. Ramnathan, thanks for joining and asking your question. The question is, if a corporate has accepted the debt on Threads platform, can the facility be construed as non-resource facility for the seller? After all, a corporate wouldn't accept the debt without checking the goods or services. Sandeep, would you like to take it up? Sandeep, I'm not sure if you were connected, so I'm bringing the question back. The question is, if a corporate has accepted the debt on Trades platform, can the facility be construed as non-recourse facility for the seller? After all, a corporate wouldn't accept the debt without checking the goods or services.
Yes, Ramanathan, this is completely agree with you that this is a non-recourse facility for an MSME. If there is any delay in repayment by the corporate at any stage, there is no interest charged to the MSME. There is no default levied on the MSME as a rating. So everything is connected with his customer, which could be a corporate, where the penal interest or any other kind of an interest has to be recovered. So you're right in your understanding.
Thanks for clarifying, Sandeep. And though we are towards fag end of the session and it's already 12:56, if I don't ask this question, the session would not get over because we are in midst of IWD, International Women's Week, and break the bias is the theme this year. So both of you come from a progressive organization, and if anyone has to look at the page of M1 or India Factoring, they will find a lot of diversity there, a lot of respect for everyone, inclusion there. So I would love to understand from both of you, what is one bias that you would want to be broken? Starting with you, Sandeep.
Very interesting point, Gauri. I would say celebrate Women's Day every day.
Thank you,
That's
Sandeep.
all.
Over to you, Ravi.
Yeah, perfect. I think it is not only about Women's Day. Of course, women play 50% of the population on the globe, and in India, if you exclude them, you're leaving out that sort of a potential of the economy. So every woman contributes to the economy. I don't think, as they say that if there are no women who are not working, as they say, either they're working from home, working at home, or working in the organization. That's the difference. So everybody's working. It's only about recognizing the true potential and bringing every woman in the potential opportunity space also. So that's about being gender neutral across functions. And as regards your question on the bias, I would say it's a merit is something which we should define the ways and the means of working. We are seeing in today's crisis also the humanitarian crisis in Russia, Ukraine, where India is bringing back its huge amount of students, to around 20,000 students studying abroad, because they don't have enough opportunities in India. So that's also the general the bias, possibly something which India needs to aspire, and definitely it's unnerved me that these many students are going because there are not opportunities in India. So these are the biases which we need to bring it out and clear in the open and break it as early as possible. Thanks.
Thank you, Ravi. So celebrate women every day, and we would not need a Women's Day anymore, is the message. Thank you so much, both of you. And thanks for being patient with me as I had a patchy connection today. Thank you so much for your patience, being here, and responding to all the questions. Thank you.
Thanks,
Thanks. Thanks
Gauri.
so
Thanks,
much,
Ravi.
Gauri.
Bye. Bye.
Thanks, Sandeep.
Thank you so much, everyone, for joining us today. Like I said, there were challenges, technological challenges, but the show must go on, and it went on, and we got all answers what we were looking at. Thank you so much once again for being here. If you want to know more about India Factoring, you can go to our website www.indiafactoring.in, or our LinkedIn page, or Facebook, or YouTube. We are present everywhere, and we are ready to cater to your requirements. We will be back with another interesting session on 4th Thursday. We are here on 2nd and 4th Thursday every month, and do not miss this another opportunity to connect with industry experts. Taking your leave, thank you so much.